Income tax. We've all seen that number on our pay stubs, the one that makes you do a double take. Where did all my money go, you ask? Well, a big chunk of it just vanished into the ether to fund roads, schools, and maybe that one congressman's new yacht. First up, we have income tax, the big kahuna. This is a tax on your wages, your salary, your tips, and basically any dollar that legally enters your pocket. But here's the million-dollar question. Who really pays it? Technically, it's taken out of your paycheck before you even see it, but economists argue that the burden is shared. When a company knows they have to pay a portion of your salary to the government, they calculate that into your total compensation. Essentially, you might be earning less than you could because the employer is footing the bill for your taxes. So, while you sign the check, the business feels the sting. Corporate tax. This one is the favorite punching bag of politicians.
You hear about it every election cycle. Raise corporate taxes, or lower them to create jobs. But what is it really? A corporate tax is a levy on a company's profit. That's the money left over after they pay for supplies, salaries, and office coffee. However, the corporation doesn't pay the tax. It just passes the hot potato. Picture an accountant in a sleek office, moving numbers around a spreadsheet. When a tax bill hits, the company has three choices to recoup that money. They can raise prices on consumers, cut wages for workers, or reduce dividends for shareholders. Studies show that workers often bear the brunt of corporate tax hikes through lower wage growth. So, next time you buy a soda and it costs a little more, you're not just paying for the sugar water, you're paying the corporate tax bill. Sales tax. This is the tax we all love to hate, but it's the most upfront and personal.
You go to the store, pick up a new video game or a pair of sneakers, and the total is higher than the price tag. That is sales tax, a consumption tax levied on the sale of goods and services. The cashier scans the item and poof, the government takes a cut. It's a transparent tax, but also a regressive one. A flat sales tax rate hits lower-income households harder because they spend a larger percentage of their income on taxable goods. If a family needs to buy food and clothes, they pay that tax regardless of how much money they make. So who really pays? The consumer walking out of the store with a receipt in hand carries the entire burden. The store is just the middleman, the collector for the state. Property tax. Imagine owning a house that you love, paying off the mortgage, and then getting a bill from the government just for the privilege of owning it. Welcome to property tax. It's an annual or semi-annual tax based on the assessed value of your real estate. If you live in a big, fancy mansion, your bill is huge. If you live in a modest apartment, it might be wrapped into your rent. But here's the twist. Who really pays? If you're a renter, you probably think your landlord pays it. But the landlord adds that cost directly to your monthly rent check. It's the silent cost of housing. For homeowners, they pay it directly to the county. This tax is fun because it fluctuates. House values go up, taxes go up. You might be sipping coffee watching the sunrise, but really, you're just paying for the local schools and fire department. Payroll tax. We need to talk about the sneaky tax. Ever looked at your pay stub and seen FICA or Medicare? That's payroll tax. Unlike income tax, which goes to the general government fund, this tax is specifically earmarked for Social Security and Medicare.
It's often split 50-50 between the employee and the employer, but here's where the illusion falls apart. Economists agree that although the employer sends the check, they really deduct the employer's portion from your potential wages. If they didn't have to pay that 7.65% for you, they could pay you 7.65% more. It's your money, but it passes through the business's hands first. You are paying for your future healthcare and retirement, but in the moment, it feels like an invisible cutout of your salary that funds a system propping up the baby boomers. Sin taxes, or excise tax. Finally, we have the tax on our vices. Have you ever bought a pack of cigarettes or a bottle of whiskey and thought, wow, this is expensive? That's because about half the cost is tax. We call these sin taxes, or excise taxes, taxes on specific goods like alcohol, tobacco, and gasoline. These aren't just about raising revenue. They are designed to discourage you from using the product. The government taxes the manufacturer or distributor who adds it to the price. You pay for it at the register, grumbling the whole time. But here's the conflict of interest. The government needs this tax money to fund services, but they need you to consume these products to get that money. So, are you paying for your health? Or are you funding the state budget? Usually, it's both. It's a tax that hurts the wallet but hits the conscience hardest. So here's the truth. Individuals always pay. Whether you buy a product, earn a wage, or own a house, the tax burden trickles down to you. Corporations and businesses are just collection agencies for the government. They pass the cost along like a game of hot potato. If you enjoyed this breakdown and want to understand the money game better, hit that like button and subscribe so you don't miss the next deep dive.